All right, guys, it's Paul Singh, the market speculator, with the weekend swing trade report, bullsonwallstreet.com. Let's take a look here. SPY, we talked about this yesterday. We did a stocks and coffee last Sunday, and we were talking about how the market was at extreme levels to the downside. We had this hammer that came in Friday that could be at least a temporary hold here of that bear market downtrend, and there was potential for a powerful bounce. We've talked about this many times. Bear markets tend to have the strongest bounces. If you go back in time and look at where the biggest up moves have been, they've actually been within bear markets and downtrends. We saw that earlier here. We had a pretty significant bounce here from 420 to about 460 on SPY, which is a very big move. We had another one here from about 410 to, again, right around 460, maybe 465. And now look at this. We had a low here on Friday of 380, already up to 416, and could go higher here. We're playing the bounce here. We've got Apple, and you can see that's bouncing. We also got in NVIDIA. That's doing quite nicely as well. And we still have a hedge with our SARC position, which could pull back more, but we want to have a little protection going into the 3-day weekend with these current positions. But back to the indexes here. What we want to see now is where the bounce could potentially stall. And that is pretty clear right here. We have a declining 50-day moving average. So one, we have resistance here. And that resistance is not uptrend resistance. Like when we pulled back down below the 50-day moving average here, it wasn't really declining yet. Maybe it kind of flattened out, but it wasn't in a downtrend. And every time, since the pandemic low that we violated key moving averages, they've essentially still been in uptrends. So your expectation is they can recover very quickly. Not the case now. Not only do we have downtrend, we have the resistance right above us. So we need to watch coming into this week. This is the area we're watching very closely. So if the market starts to bounce Tuesday, Wednesday, good spot to start taking profits if you have already made some bounce plays. If you have not yet, you should probably wait and see, and that's okay. Remember, one of our adages is when you're in a bear market, the first move is okay if you miss it. So here, because a lot of it is guesswork here on that first move. But now we want to see, is this a sustained move? 50-day moving average becomes very important, 200-day. If we clear the 50-day, we could play this kind of moving average sandwich, we call it, and make a trade in between there. And then if we break through the 200-day, and we've already made 2 attempts, the third attempt would probably be nice here, and we could see a move to highs. Now, these are some big ifs here, because right now we are still in an overall topping pattern. And that pattern is there essentially unless we break the 200-day moving average. So we get aggressively bullish in terms of trend if we got back up over the 200-day. A long ways to go for that to happen, but it could happen very quickly. Essentially, it would just have to replicate this week-long move here to here. Then we would start to get even more bullish. Now we're just playing a bounce, and we plan to get out very quickly. But otherwise, we could start playing trends again, and we see which new leadership had emerged by that point. But until then, we still have a bias that this bounce is going to fail at these resistance levels. And if it starts to, we start establishing shorts. And we're essentially still in this topping pattern. If we were to start to fail at the 50-day moving average, the expectation is another leg down, similar to these size moves. These are called measured moves here. So our expectation would be something similar. So probably down to here, which corresponds now with where we were in 2020. So that's what we're doing. That's what we're watching right now, playing a bounce within a bear market. So that's the mindset you have to have here. Here's the cues. Strong bounce, but overall pattern is even uglier than SPY, and then IWM similar here. Now, that's the market. That's our outlook. Play the bounce. Watch resistance. If we break through resistance, then take some more long shots. If we start to fail at resistance, establish shorts. Let's look at some industries here. Retail had been crushed when inflation's numbers started coming in, and it finally started to show that consumers were starting to spend less. Target had a warning. Dick's Sporting Goods had a warning. A couple other, Snapchat had a warning, which relates to advertising. And we see here there has been a huge down move in retail. XRT is a good retail ETF. You can see a bunch of stocks in here, 108 different retail stocks. And what I like about this, it has big box retail, it has specialty retail, it has online retail. You get a little bit of everything in here. In these 108 stocks, very strong bounce. And we can see that in some of these stocks as well. Target, which had warned and pretty much sent all of retail down, is testing its 9 EMA and has pulled, about to pull into the gap. Costco here, same thing. More of a specialty retailer. Ulta here, look at that. Huge move. And Ulta had earnings, and look at these 3 big gap ups. So retail looks a little better right now. Good bounce play here. We watched that very closely. Metals had pulled back deep. They were a leader in the market, and essentially you see almost all the metal stocks doing this, deep pullbacks and holding the key 200-day moving average. Energy, very different chart, right? Where we've seen deep pullbacks here. Energy is still on a trend. You couldn't, if you looked at the energy ETF here or any of the energy stocks and didn't know what was happening in the market, you would think the market's in an uptrend, because look at that. Energy is on fire. Financials, which took a big hit, have bounced very strong right into the 50-day moving average. And then growth, here's semiconductors bouncing, but still overall negative pattern. Here's the ARK ETF, which has a lot of growth stocks. Again, big bounce, but barely recovering any of the big move down. We still could see a move to the 50-day moving average. And then here's airlines is interesting too, because airlines did not pull back as much as some of these other areas. And it looks like there has been some accumulation in airlines. So that's an area we will be watching closely. And then finally, housing here. Housing is bouncing, but this is one of my favorite, we'll say midterm short, like mid holding in terms of how long you're holding, short term, long term, midterm. I would say this one here, very strong topping pattern. And if we know the fundamentals of some of the stuff that's going on in real estate, maybe this is a good, really good kind of buy or short and hold for a little bit shorting opportunity. And here's a bunch of the real estate or housing stocks that you could be trading as well. So those are the industries. A couple of earnings I want to point out. We already talked about Ulta, and we're getting some nice pops in beaten down retail. Here's Macy's, which was beaten down, and they had a nice bounce as well. This thing, just 6 months ago was trading at almost 40, went all the way down to 17, and now bounced from 17 to 23. And this was earnings right here, big pop there. But what's most interesting to me right now, DKS and NVIDIA. Let's start with DKS since it's retail and we're talking about retail. Look at this crazy candle here and the line we've drawn here. So DKS warned on earnings. They basically said we need to adjust our numbers. Inflation is hitting us. That's impacting the consumer. And going forward, we need to adjust our guidance lower. Of course, the market hates when they hear that. There was a big, huge after hours gap down. And then in the morning, the stock gap down. You can see where it was before. It was trading around 72, 73. It gapped all the way down on the earnings day to 63, a 10-point move down. And it came right into, we actually drew this line as it was happening to watch if there was support at this level because it was a 2020 high. Bounced exactly at that level and intraday completely reversed it and was up a big percentage. Crazy move, very rare. When you see that on an earnings, when you get a big gap down and a recovery that exact same day, that's often a very strong move. And look at how it has bounced since. And then one of our current positions here, NVIDIA, same thing. NVIDIA did the exact same thing DKS did. They basically said, we need to adjust our guidance. Inflation is hitting, supply chain issues, the consumer, and we had a gap down. This was more after hours, and it was only down 2 or 3% at the open, but it was much bigger after hours when they had put out this news. And look what happened intraday. Completely reversed, enveloped the previous candle, and now looks very strong. So whenever you see something like that during earnings season, and watch for more this coming week, that's a very strong move for that stock. And because it's happened to a few of these stocks this week, maybe that's a good sign for this market. We'll see. The news is not good, by the way. but we're talking about price action to that news, and that's what we have to trade, not the news itself. And even though the news was horrible, for these two stocks in terms of what they said, price action, incredible here with those two moves. So watch the video, watch DKS, look at this earnings week if we see something similar. And then Ulta and Macy's had a very nice earnings in retail, and we're watching retail very closely because that is one of the areas that really impacts the consumer and all that inflation stuff. Okay, one last thing here. Let's take a look at big tech. Big tech has been really beaten down, and we've seen some nice move. We're in two of them. We're in Apple here, and you can see Apple put in that Friday hammer. Looks very much like the Qs and bounced very strong. We're targeting the 200-day moving average here, and then we'll see if we can break through that. Microsoft here, very similar pattern. AMD, which has shown a little bit of relative strength compared to some of the others here. And this is very strong too. I'd love this thing if it gets up over the 200-day moving average. Amazon has been crushed. It's most tied to retail of all these guys. You can see here it was trading over 30, right around 3,800, and almost cut 50% off down to 2,000 here. And now has it bounced to 2,300. A lot of room till it hits its 50-day moving average and maybe this resistance level here. So this is an interesting one. Ugliest chart, but as a bounce play potential here. Disney has been crushed as well. And watch for this thing to bounce to the 50-day moving average. And remember, when I talk about these bounces, don't only watch the bounce or trade the bounce, but see how it handles resistance. If it starts to fail, that can set up these next legs down. Netflix is a pretty ugly chart. Maybe you get a rubber band bounce here, but it is a broken stock. Google looks good here. Remounted the 9, rebounded 9 EMA. I don't like this tail here, but maybe a move to the 50-day moving average. Then finally, Facebook here. Pretty ugly chart overall. This was a gap down on earnings. I probably wouldn't touch Facebook unless it could pull back into the gap, which is a ways away. All right, guys. That's it for the weekend report. Potential for more bounce this week, but then watch resistance. Does the market fail? Remember, you can get more in the swing trade report. You can head on over to Bulls on Wall Street, go to part-time trading. That's our swing trading service here. And then you get a report, alerts, chat room, and all that good stuff. All right. Talk to you guys soon.